Clearly, 2020 isn't going to be the year many of us expected it to be. Droughts, bushfires, and now there's the coronavirus. So what's ahead for our property markets, particularly in light of the coronavirus issues? Are the property markets going to crash like the share market has? Is Australia going to fall into recession? Now, clearly that's on the mind of many investors in light of the economic woes around the world and the uncertainty surrounding the coronavirus. So to discuss these important questions, let's have a chat with Dr. Andrew Wilson, Australia's leading housing economist and chief economist of myhousingmarket.com.au. Hello, Andrew.
Hello, Michael. Yes, I'm glad to see you still smiling.
It's hard when you turn on the news or look at your iPad. There's so much bad news there, isn't there?
Yeah, I guess one doesn't want to be cynical about this, but certainly it's been a year so far, as you alluded to, of quite scary headlines, and not wishing to downplay anything, we certainly now have the scariest of all our headlines in regard to the coronavirus. But as we speak, or a glimmer of hope on the horizon in terms of, a lot of the doubt, which of course we can understand, is starting to now crystallise into a little bit more certainty as to the outlook. But there's no doubt that this has had a significant impact on global markets, particularly share market.
Well, let's make it clear so there's no confusion. You're not a medical doctor, are you? You're actually a doctor, a real doctor, a PhD.
Well, that's perhaps one way of putting it. But a PhD really is a person whose primary qualification is in research.
Sure. Well, at the moment, there's not warning that this is a pandemic. But before we had a chat, I actually had a quick look, and the definition of pandemic suggests that actually we have got a pandemic, even though our health authorities aren't going to call it that. But let's maybe call it something different. It's an infodemic. There's so much information in the media, scary social media, panicking people into buying toilet paper, bottled water, and even in the Chinese restaurants, people aren't going to the Chinese restaurants in suburban Australia. So back to my original question, Andrew. What's going to happen? Because I see two extreme views. Some say it's just going to be a bad flu, nothing to fuss about, while others think it's going to trigger a major humanitarian and economic catastrophe, killing millions of people and triggering a global recession. What are your thoughts?
Well, I think that as the evidence is unfolding, Michael, this is quite similar so far to seasonal influenza in terms of its effects on those that are infected by it. We're now starting to see evidence again of those significant majority of those that are infected are recovering. And we're also seeing in those countries where there was the initial, surge in the coronavirus, and that's China and South Korea, that there's now a significant decline in new infections. So it seems to be working its way through particular populations. But as you've said, Michael, we're in the era of mass communication and globalisation, and that's affected particularly economies in the short term, but I'm not so sure in the medium term. It certainly had us glued to our television sets and our media outlets. Not sure that they've shrouded themselves in credibility in terms of the scaremongering in some parts of the media that, not surprisingly, has been a feature.
Well, we've both been in property for a long time. I've been investing for over 47 years. And looking back on my perspective gives me an opportunity to see what it's going to look like maybe in the medium to long term. There's no doubt that the uncertainty in the short term is still working its way through. We don't know at the time of this recording how big the government incentive packages are, but it looks like the government's going to step in quickly. Federal governments, state governments are doing things. But Andrew, I believe a year from now, definitely 5 years from now, and certainly 10 years from now, this pandemic will have had no influence on where the Australian property markets are going to end up or the value of your and my home. Sure, in the short term, they may have some effects.
I'm a little bit more optimistic than you, Michael. I don't think they'll have any effect at all. Certainly not a noticeable effect. And I think the housing market is a completely different animal to the share market. We don't have that hysterical volatility either up or down, and we're not as exposed as our local share market is to what happens particularly on Wall Street. Just as a bit of an update, probably seeing some early signs of marginal impact on the housing market. Michael, I do track new listings coming through on a daily basis, properties advertised for sale. And at the beginning of this week, and of course this is the second week in March, just started to see a falling off of new listings, just down by a couple of percent on a week-by-week basis. Now, there might be some seasonality involved in that because new listings project towards weeks ahead of market activity, particularly for auctions, and we have Easter coming up. So that might be a reflection of some easing in new listings for the Easter period. But nonetheless, there is a slight sign there that listings are just tapering off marginally. And that may be due to sellers just feeling that they're going to wait and see how this particular issue pans out. But until this date, auction clearance rates really haven't missed a beat, very strong in Sydney, and buyers are still up and about in that sense. But I can understand if some sellers were just becoming a little bit hesitant, those discretionary sellers, about putting their property on the market.
Well, discretionary sellers are wondering what's in store if I could put it in the market, what's the auction market going to be like in 4 weeks' time? And buyers are maybe wondering, can I get it a bit cheaper? They're reading that the stock market has crashed. So let's just quickly put that in perspective, because over the 40-odd years I've been investing, I looked it up, there have been 12 corrections in the stock market of 10% or more. There have been 8 corrections in the stock market of 20% or more. We've had 5 recessions where we've had 2 quarters of negative growth in the past 40 years. We've had significant drops in the stock market that recently have just taken us back to the levels of 2019. But look at property over the last 40 years, Andrew. Those same 40 years, when it started in 1980, the median price in Melbourne was $39,000. Today, it's closer to $900,000. The median price in Sydney 40 years ago was $68,000. Now it's over $1 million. Property is much more resilient, much more stable. And I guess it's because it's underpinned by owner-occupiers who are not going to sell up if suddenly the coronavirus comes.
Well, why would you? I mean, a property is based on the provision of a good that we all need, and that's shelter, of course. Whereas, stock market has that volatility. Our share market is affected by Wall Street in terms of its ups and downs. Now, if we look at the performance, as you mentioned, of property versus the share market, we can see now with this shakeout through the coronavirus, the All Ords is back to where it was around about at its post-GFC peak. Now, since that period, we've seen the US stock market double in value, and house prices, as you said, in Melbourne and Sydney have doubled in value, and that's since the end of 2007. So notwithstanding its connection to Wall Street, the Australian share market has clearly underperformed since the GFC, particularly versus Wall Street, and obviously particularly versus the growth or prices for houses in Melbourne and Sydney.
Now, we don't want to downplay the effects on some businesses. If you're in the tourism industry, hospitality industry, certain retail sectors, there's no doubt businesses are going to suffer, and there'll be some supply chain issues as well. And some people are suggesting now this could finally lead Australia into a technical recession. In other words, a couple of quarters of negative GDP, negative growth. But it's likely that if that's the case, there's going to be a recovery in the second half of the year. And when you look back at the end of this year, it'll be a blip, it'll be a disruption, but it's not going to be anything like the recessions of 30 years ago, Andrew.
Well, that's right, Michael. And the first point I'd like to make is that we've had, which concerns me, some heroic and certainly, I believe, premature predictions of an almost certain recession over the second half of 2020. That obviously means negative growth in September quarter, followed up by negative growth in the December quarter. Now, our GDP numbers have certainly not been what they were during the mining boom. Our latest quarterly growth rate was just 0.5%. Over the December quarter. So it wouldn't take much, I guess, to trim that 0.5%, given we're likely to take a hit from, as you suggested, tourism, students particularly, which is a significant export sector, and those supply chain issues also. So given that just that 0.5% growth rate over December, I guess it's logical that we would expect to see significant hit on that 0.5%. I'm not so sure, Michael. The government has announced significant stimulus packages in the billions of dollars, designed obviously to offset that. There's been a lot of negativity about our economic growth, our GDP. It hasn't really come to, I guess, reality in terms of those predictions of a recession. I'm not so sure it'll be a reality, as some have almost certainly predicted over the second half of this year. It's likely to be lower, of course, but whether we actually get 2 consecutive quarters of negative economic growth, I think that that's still not as likely as we have to have perhaps one at the outside, followed up by a gradual recovery in growth. The governments, not just the Australian government, but all governments, are committed to doing what it takes to offset the negativity of the coronavirus impact.
I think they've done well in regard to health measures, but also economic measures. They've actually taken the front foot, and that's to everyone's advantage. But it's social media, and I guess the media in general, that's scaring people. So what's going to be missing in the next little while, in my mind, Andrew, is business confidence and consumer confidence.
Well, look, that's right, Michael. And I think we've sort of been a little negative about the share market, and it is volatile. That's the nature of the beast. But I think if we can get a sustained recovery in the share market, and early days it's looking like that might be beginning, I think that'll be the first step into recovering confidence. And I think profit takers will have moved out of the market, and those thinking about it being a good time to buy will start to move in, and understanding that really the fundamentals of the economy as they stand now are still quite robust. Although I'm certainly not suggesting we won't have some impacts from the coronavirus, particularly on our export sector, which reflects people traffic, and that's, of course, tourism and students. I'm reasonably positive that that will be offset to some degree by government action.
So a final message to those people who are interested in getting in the property market, whether as a home buyer or as an investor, what would you say to them?
Well, look, I still think the fundamentals are what you look at, Michael, and the fundamentals are that we're still recovering in Melbourne and Sydney, particularly from what was basically a media-fueled downturn and a fear initiative, low confidence a year ago. So there's plenty of upside in terms of recovering, with prices in Sydney and Melbourne still below where they were 3 years ago. And of course, we still have the lowest interest rates on record, and probably another cut likely as part of that government stimulus package and stimulation by the Reserve Bank, which will only make property even more affordable. And we have a surge in first home buyer activity happening at the moment, Michael. So I still think the positives are there for the housing market. Early signs of a flattening of what's been a sharp decline in confidence. And I'm hopeful that we won't have this as a significant issue really within months rather than the years that some are quite concerningly promoting at the moment.
In my mind, you shouldn't make 30-year investment decisions or 10, 15-year home buying decisions based on the last 30 minutes of news. I remember the wise King Solomon had an inscription in his ring that said, "This too shall pass." That was so he wouldn't be too confident in the good times or too despondent in the bad times. Sure, the coronavirus has spooked our markets around the world, markets in Australia, and there's no doubt it is going to have an economic impact. But like all the other world epidemics we've experienced, this too shall pass. And I know, Andrew, you recently quoted, it was actually Franklin Roosevelt who said in his inaugural speech, "There's nothing to fear but fear itself." They were wise words.
Well, they actually came from Voltaire in the 18th century, Michael, but I don't want to get too deep into the academic side of things. But I think that the other point to this is a very good test for our open market environment and globalisation. I guess some would say that this is a test for globalisation and has perhaps produced some negatives as a result of our open border policy that's really been an ideological tenet for the last 20 or 30 years. But if we get through it, I guess we'll get through it together. And signs are that that's happening now. And maybe that's, again, a positive for the next time we do have another incident such as this, to test our resolve and to test our confidence.
Well, we'll be meeting once a week to have these Property Insider chats. It'll be interesting to see how things unfold. Thanks for your thoughts. Thanks for your time, Andrew.
Yeah, good chat. Thanks, Michael.